In this video, we will be backtesting and be looking at what happened on gold last week, and I hope you guys learn from it, and also the trades I sent on my free Telegram channel. So on the daily last week, this was the price came here, took liquidity here, then was reacting up from this daily FVG here. This imbalance here, the price came balanced, so I know quite already that we are moving up. So we scaled down to the 4 hour, came down to the 4 hours here. Nothing, there was nothing here. Price came here, was consolidating last week, then consolidating over to this new week. This was when the market opened. I think this was Monday market. So I was just sitting, just watching the chart, doing these things here. So over to the 3 hour, there's something on the 3 hour here. This was the 3 hour. Price came here, reacted off this V shape. This is a V shape key level here. This is a V shape key level here. This is a V shape key level. The price came to this V shape key level, but it came here, took out this liquidity, here, then bought from here massively. So just like place stop loss below the last week here, then target this high like 1:6 for price to take out this liquidity here. So over to you again. Same thing that happened on the daily time frame happened here also. Let's go down to the 1 hour. Over to the 1 hour here, price came, reacted off this a shape key level here. The shape key level here. Came here, took liquidity. Price took liquidity here. Price came here, took liquidity, reacted off this FVG. There was also an FVG, 1 hour FVG here. But something happened there earlier on Tuesday, Monday, from Monday to Tuesday, I think something happened there. So the market moved up to this key level here, this A-shaped key level here, and price was like give a sell, both back to our entry here. So all I just have to wait is just I just waited here over to the and whenever price is playing out, this was our single candle liquidity that was created here. Our single candle liquidity created here. Single candle liquidity created here. So all I just have to look for is the nearest key level. This is an open close key level here. This is an open close key level here. So price came here, reacted off it, came here from the key level. But even though you missed this, because I missed it too. I missed this also because I was actually waiting on this key level here. But price played out from this V-shape, this key level, this open and close key level here. So I waited up to this level here. Price also gave us a V shape. This is a V shape key level here. V shape key level here. The price gave us a single candle, 1 hour single candle liquidity here. Came here and bought. The buy was massive. So bought from here, clearing all this liquidity here. This is a 1:5, 1:6 setup. So so over to this 1 hour here, something else happened here. Price came here, price came here, engineered this liquidity. This was the liquidity here. Price came here, engineered this whole liquidity. Nearly liquidity. I reacted off from this key level. This is a key level. This was the liquidity that was created. A open and close key level here. Price came from this open and close key level here and bought from here. You can just target like 1:6, 1:7. But something happened here. There is something that happened on this 30 minutes on gold that I called RBS. RBS, which means resistance term support. Resistance term support. So if you come here over to here, you can see that price was resisting. This was the resistance here. Price will come over to here, sell. Price will come over to here and sell. I remember what I said. A key level that sponsored a sell, when price comes back to it, is usually very strong. It's a strong key level. A key level that once sponsored a buy or sell, when price comes back to it, key level is usually strong. So this is an RBS that happened here. Price came here, broke out, turning our resistance to support for the major movement. So what happened here? Price came here over to this V shape. There created a single candle liquidity here. Single candle liquidity here. You can use this and trade gold. Just study this video properly. Just use it and trade gold. Price came here. This key level that once sponsored a sell. Because this key level have once sponsored a sell. When price came over to it, it was a sniper entry. Price instantly bought from here. Give us just target 1:5. 1:5 or so. Over to this 30 minutes also, something happened here. Price also bought again from this key level. This key level here. Liquidity, cleared liquidity here. And bought off from this key level. Your stop loss below this week. Then for price to take out these highs, this range to range, for price to take out these highs. So 1:6, 1:2. So something happened here. This was on Thursday to Friday. This was on Thursday. Something happened here. Price came here, so I was seeing a change of structure. Price came here, created a range, and took out the range high. Then changed structure here. Changed structure from bearish to so the price broke this support. This was our support zone. This was our support zone. So price came back here. This key level was the key level that sponsored our buys. So price came here, broke the key level, came here again and used. This was the key level that sponsored a buy. And whenever a key level that once sponsored a buy, whenever the price break it and goes back to it, the sell, the key level is very strong. The same thing, this was the key level that sponsored this buy. Then price came here, broke this support. Then this is also called SBR, support breakout storm resistance. So price came here, created our single candle liquidity. This was the single candle liquidity we need. This was also an imbalance on the market, LVG. Some call it imbalance, some call it LVG. So immediately I saw this, you can also buy from this key level also. This is a V-shaped key level that sponsored a buy also. This key level also here sponsored a buy. So all you have to just do is just to come here, take your buy off from this key level, because this is the nearest key level to avoid the missed entry. This is the nearest key level after the single candle liquidity that was created. The stop loss above this key level here, above this open and close key level here. Then targets, this was 4 hour 1:6, target 1:6. So the reversal happened here, the price came here. Something happened here on Friday here. This was a key level here. This was an open close key level. I use this key level a lot. This was an open close key level that sponsored a buy. Do you see how this key level sponsored this buy before the price, before price breakout here, coming back here? So notice what's happened here. So over to here, this was the key level that price used. This is the key level nearest. This looks more cleaner on the 1 hour. So let's move over to the 1 hour here. So the 1 hour, this key level sponsored a buy. That's what I explained. This key level sponsored a buy. This was the buy that the key level price rejected off this key level and bought a little bit before price broke it out. So I saw this with an imbalance, but to avoid the missed entry, this was the nearest key level. This V-shaped key level sponsored the buy. So this was the nearest key level. So the nearest key level that price came, created a 1 hour single candle liquidity here. 1 hour single candle liquidity here. Then sold off from this key level here. The stop loss will cover this open and close key level here. And target this range. This was the range that need to go. Targeted this range. So this is a 1:5 bar. So even though you missed this was also a re-entry. This was also a re-entry here. This V shape here was also a re-entry. This V shape here, this V shape here was also a re-entry. If you missed it, this is called a re-entry or confirmation entry. Let's know, because price sold from there. Let's know if price protect any liquidity again. No liquidity, but it's sold off. So this was the whole thing that happened last week on gold. Study this video. If you study this video very well, I can assure you you did good. You will have a 18 to 90% rate on gold. So